A Limited wishes to raise additional capital of 30 lakhs for meeting its investment plan. The company has 6 lakhs rupees in retained earnings available for investment purpose. The following are further details. Start. A Limited wishes to raise additional capital of 30 lakhs. The company has the 6 lakhs rupees in retained earnings. This is owner's capital, or it is also termed as equity. Equity is not equity share capital. Equity is equity share capital plus reserves. Is it all right? What is this? Owner's capital. This is debt. Now try to understand one ratio, which is debt equity ratio. This. Very simple to understand. If company has borrowed 100 rupees, they have borrowed 30 from debt and 70 from equity if debt equity ratio is 30:70. That's it. That's correct. Sir, what is the formula of debt equity ratio? Debt equity ratio is nothing but debt upon equity. This is 3 divided by 7 or 3:7. So 3:7 is nothing but debt divided by equity. That means 30% of your borrowing comes from debt and 70% of borrowing comes from equity. How much you will borrow as a debt? 30 lakh into 30%, which is 9 lakhs rupees. So what should be the equity? Equity will be 21 lakhs rupees, out of which you are having a reserve of 6 lakhs rupees. So you will have to additionally borrow not 21 lakhs but only 15 lakhs rupees. How you will be doing your project of 30 lakhs? From that you have borrowed 9 lakhs. From equity, additionally, you will be borrowing 15 lakhs. You are already having 6 lakhs in your company. So total amount will be 30 lakhs. Is it all right? This is how you will borrow the money. Is it all right? Let us first go to debt and try to answer it. The cost of debt at a rate of 11% before tax up to 3 lakhs is 11% and 14% beyond that. So same in previous question, we can solve it. EPS is 15, dividend payout is 70, growth rate is 10%. You can find out cost of equity with this 3 information. This is for KE. The company's tax rate is 30%. This will be again used in that. Shareholders, the personal tax rate is 20%. This we may use somewhere. Calculate the following. Post-tax average cost of additional debt. So first let us find out debt cost. Is it all right? Cost of retained earnings and cost of equity. Overall weighted average after tax cost of additional finance. So they are also asking us K. Is it all right? So let us solve this. First let us find out cost of debt. They are redeemable, irredeemable, irredeemable. Is it all right? I'll require some information of interest first. Interest. How much I am totally borrowing? I am borrowing 9 lakhs rupees. On first 3 lakhs, what is the interest cost? 11%. So 3 lakhs into 11% will be interest. That is 33,000. Per annum. Remaining is 6 lakhs. And what is the interest cost? Cost of debt 11% for 3 lakhs, 14% beyond that. 14%. The answer will be 84,000. Total interest will be 1,17,000 by borrowing 9 lakh rupees. But this is pre-tax. Let me find out cost of debt. Interest is formula is I into 1 minus T upon T. What is I is 1,17,000. 1 minus tax rate. You need to take company, and this all calculation is done by company. 0.30 divided by borrowings is 9 lakhs multiplied by 100. This is 1,17,000 into 70% divided by 9 lakhs multiplied by 100. It is 9.1%. And this is post-tax. Because now you have considered tax benefit. Is it correct? What we have found out? Cost of debt. Is it correct? Let me find out cost of equity. I will be using dividend approach. If growth rate is given, I need to always use that growth rate. Is it correct? What will be D0? Earning per share is 15 and dividend payout is 70%. D0 is equal to E0 multiplied by dividend payout ratio. What is earning per share? Is 15. How much dividend is distributed? 70%. This will be 10.5. This 10.5, yes. D0 is 10.5. Let me find out D1. D1 will be 10.5 plus. What is the growth rate? Growth rate given is 10%. Plus 10%. So growth rate given is 10%. 10.5 plus 10% will be 11.55. In your calculator, you need to press this 10.5 plus 10 percentage. Is it alright? In my calculator, there is no percentage, so only I am doing in this manner. Is it alright? Growth rate is 10% and P0 is also given. Current market price is 90. Start. I need to find out KE. D1 is 11.55. P0 is 90 plus G is 0.10. The answer will be 11.55 divided by 90 plus 0.1 is equal to multiplied by 100. It is 22.83%. Can KE be 22.83%? The answer is yes. Is it alright? KE is always higher than KD. That you should always understand. Now, there are also 6 lakhs rupees as reserve. So, I am finding out even cost of reserve is normally equal to cost of equity. Is it alright? Your brokerage is given no, but personal tax is given yes. It is 1 minus personal tax. So what is KE? 22.83. 1 minus personal tax rate is 20%. It is 1 minus 0.20. See, sometimes they ignore this personal tax. What I believe as a student, what you should do is, whenever personal tax is given, you can consider personal tax. Whenever the personal tax is not given, you should not consider it. But when it is given, never ignore it. You will find it out in answers that it is given that we have ignored personal tax. But when it is given, normally it is advisable not to ignore it. The answer will be 22.83 multiplied by 0.80. It is 18.264. and it will be percentage, believe me, because the base is this is percentage, so the answer will be in percentage, but just it will be after considering that personal taxation benefit. That's all right. So we are having cost of equity, reserve, and debt. What is cost of equity? 22.83%. Reserve is 18.264%. And debt is 9%. Wait. 9 lakhs rupees is debt. 6 lakhs rupees is reserve. 21 lakh rupees is no, 21 is not equity. Equity issued new is only 15 lakhs. Total is 30 lakhs. Yes. That's fine. What is this? This should be considered as I. This should be considered as W. Find out a sigma IW divided by sigma W. As I told you, weight in ratio is important. So you can cancel out this lakhs figures. Find out the sigma IW divided by sigma W. I'll have to do it because in book it is given in different methods. So KO is it all right? Will be is equal to 22.83 multiplied by 15 is equal to M plus 18.264 multiplied by 6 is equal to M plus 9.1 multiplied by 9 is equal to M plus. MRC is 533.934. 533.934 divided by 30. It is 533.934 divided by 30. It is 17.79, that is 17.80%. Start. See, this answer was in percentage. This answer will be in percentage, even if without multiplying 100, because already this is multiplied by 100. This is multiplied by 100. The average will be of this. So average is in percentage. So average will be 17.80, which is minimum 9.1, which is maximum 22.83. The average should always lie between these two figures. That's all. So